Okay, so this is my EOD recap for Monday. Nothing happened today. I mean, it was a clean day when first coming into it and determining my narrative. Honestly, very clean, but there was no trade offered, so possibly reversal. There was a possible trade, but it happened at an irrelevant time early on, and I don't show up to the markets at that time at like 7 a.m. Um, and then continuation wasn't validated, so and then everything after that, the trade ass sync just wasn't too clean. So let's get into it. Um, so right now it's 2 p.m. So pretty much end of day. It closes in 3 hours. Um, so let's go to the weekly though. I think that the weekly narrative is going to really show what price is actually doing on the higher time frame. So we created SMT with a low on NQ, and we closed bullishly on YM while we closed bearishly on NQ, creating a second stage PSP. Then following that, we lost this to they just place higher. And C3 on YM being the leading asset reached the draw on the 31st and created S&P with NQ. We know this is likely follow S&P because of the filters that we look for to determine if it's fake. Right. All assets, what do they do at the reversal? They V-shaped. They're all reversing higher. So that typically means all assets are going to reach the same target level. Whereas that SME being printed within this range, OT, right? So it's likely fake. You want that shit to be spaced out if it's prominent, but it's not. It's close proximity. It's like right when we create this S&P here, it's like we're creating further things with the overall S&P high, so it's not something you would want to see for bearish. And then, okay, this is essentially the universal sequence on the weekly, right? This displacement higher confirms the reversal. We know this is follow S&P, so we know price shouldn't reverse away from it. It's like a retracement. It's going to cap off the retracement, this gap. Last week retraced into that gap, but it didn't reverse, right? Instead, price closed more of an expansion channel. We kind of like late in the week, kind of just inside bar consolidated, left feather swings at the lows. So this is when we can anticipate, when price hits the key level and doesn't reverse, closes more of an expansion candle, and the next candle is opening up near the low of that candle. We can anticipate, especially since it's opened up near it, we can anticipate the next candle to open up early on and manipulate that low to then go higher. So essentially, we're within this key level, but we need to manipulate pre-week low to continue higher. So pre-week low is pretty much the refined key level to form the low that we go off of, right? It's like a relevant swing. It's almost like invalidations, right? If we hit the key level, right, and price doesn't expand immediately away from the swing point, count two, count three, count two, count three, then we demand price. We give it two chances. So it needs to reset this level and then ideally go higher. Ideally, for bullish. So yeah. So ideally, if we're gonna be bullish today opens lower into that, show reversal signatures away from it, and we try continuation, etc., etc. Simple as that, really. But I want to talk about how look at this like phaser price on YM too. Right, we have this clear and obvious V-shape expansion higher, and then look how we kind of just retrace back into this range. Like look at this price action, kind of 1, 2, 3, 4, 5 candles making up this range here, versus 1, 2, 3, 4, 5, 6, 7, 8, etc., etc., etc. Candles making up this retracement. Like it's very clearly retracement, leaving feather swings on the way to EQ this range, right? So notice how sorry, switching is so interesting. Like notice how this asset right now, YM, is in discount of this range clearly below EQ, while NQ being the strongest asset right now is in premium right above EQ. This is a form of string switching, while this asset was once stronger, now it's weaker below EQ. While this asset was once weaker, now it's stronger above EQ. It's a form of strength switching in a way. But then we also have like a fractal strength switch within this overall PA where, yeah, this asset's in premium. So temporarily it's stronger right now, right? Momentarily switching. While this asset's weaker, but it's momentarily switching stronger based on how Friday closed. Much stronger closure versus NQ. And we know that within this price action here, we have a clear and obvious V-shaped reversal, which you could say makes up the wick of the previous week's range. So you could say that range is a prominent range to hold. Reversed, we should continue. So ideally this week respects premium wick C, which we can anticipate SMT to form with pre-week low because of how NQ looks versus YM, right? How Friday closed on NQ or YM versus NQ. NQ on Monday to open up way closer to pre-week low, while YM is opening up pretty far away from that. So, nevertheless, Monday opens up, heads lower at first. So it's pretty much like, I just wanted to go over that, but we understand the narrative like on the hard time from the weekly. Why this week, ideally it should be bullish. And Monday retraced into the refined color from the low week away from. So it's like so we understand the bullish narrative. Well, I want to see continuation hard to target these highs, but also what really supports the bullish narrative is the candle profile, especially. Today opened up lower here. Yeah, it kind of accumulated higher above the opening price, but didn't engage with any key level. No asset did. Right, we just inside barred on. This is the opening price. We just inside barred, consolidated, didn't engage with any key level going into London. Same with ES. Just opened up with the consolidation, and then price heads lower and mid plates range level consolidation. So we can view the framework to frame the confirm the low day as order pairing ranges or manipulation ranges. And we 2 a.m. or yeah, pretty much 2 a.m. reached the draw on liquidity and created SMT via advanced premium to discount with YM, so it's very spaced out. We know that YM is kind of still in this consolidation, and if we're going to continue from the previous day's range, from the low to the high, EQ should be respected. We're finding that out of the 4-hour. It's likely going to be a gap closest to the daily open or within the upper half of your range, which is this gap here. That should form the low day. And then we've seen 6 a.m. retrace into it. Right. And create string switch second stage SMT. The string switch being swing point SMT. That's exactly what I need to see. If I'm going to trade the initial reversal away from the low day, etc., away from the refined killable, then I need to see string switch second stage SMT to trade the initial reversal. Right. So, but the only thing about this that I don't like you can even see the phase of price too. Like we have this V shape, right? Last week, and today or yesterday, and then we clearly we reached into OT of this range in a way. Not something you would really want to say for bearish, but let's say if we are bearish, we hit a key level, we should immediately V-shape away from that. But instead, price leads feather swings on all assets on the way to EQ this range or into the gap, which is a expansion mode consolidation / retracement is a continuation signature, so that as well supports the bullish bias. So this is like an A plus day. Not only does the daily profile support the bullish framework of price opening lower, which is how we want a bullish day to form, but also the higher time frame phase of price is aligned with it too. Expansion mode consolidation / retracement, which should expand again on established high day, leaving feather swings. So yeah. draw liquidity is super clean as well. This is like an A plus day. But when we form this string switch here, it happened at an irrelevant time. That's why it was untradeable for me. Right. So we create that 4-hour string switch second stage SMT here. And the open. And I want to ideally get in before price takes us out. Yes, because like the daily profile opens lower. We have that small wick. I can definitely anticipate price to expand greatly beyond this high to possibly reach for this high, which is this daily high here. Which you could say the framework on the daily is what's this daily high. So you could say the framework is ordered pairing ranges or internal to external. So we could possibly pretty high is those highs right here, here, but so we can definitely anticipate price to expand beyond pretty high greatly to reach for this high. But ideally, I get entered into price before it takes out this high. Ideally, the main logic behind that is actually I didn't even think about it, but think about universal sequence. This is very important. If this is like, say, the model order pairing ranges on the daily, and if we say this is C3, which is really not a problem with C3, but or let's say it is. Technically, we're trading C2, right? But C3, C4. If we're wanting to see continuation away from this key level towards the draw liquidity, C3 confirms the framework. We want to see daily expansion candles away from the key level at that point towards the draw liquidity. So if today's going to create C4, then it should respect EQ of pretty range, but we want to see an aligned framework on the 4-hour, right? Daily order pairing ranges, range low to range high. Well, we confirm that key level with this V shape. Now the 4-hour aligned framework would be internal to external. So I want to get in. I want to be entered into price before it takes out external liquidity on the 4-hour, ideally, because I want to have aligned framework, right? I want to have daily framework aligned with 4-hour framework, ideally. And you know, if we enter beyond this high, we're pretty far away from this high, so it's like there's a massive like void here that we got to fill in. It's not high probability at that point. But yeah, again, couldn't trade the initial reversal. Well, let's see if we could. Right. So we know the day opens lower, so we can fade the daily candle because it has that large wick on NQ. And obviously, I would want to trade YM in this scenario because it's overall the strongest asset. But let's look at YM. Let's see why NQ is actually cleaner though. So 6 AM opens up here and it immediately opens lower, has that large wick around the 4-hour. We want to ideally be trading 4-hour expansion candles, but we can mechanically fade this 6 AM 4-hour candle if we are entering around EQ and our stop loss is positioned in the lower half of this range here, pretty much right here. So 7 AM, right, pretty much creates that SMT, right? Like it looks cleaner than that already. We create that SMT technically here, the string switch here, but we don't close as a mechanical C2, right? So we got to create that. We got to rerun this low out here. So you could say the hourly doesn't really support the bull expansion though. It has a kind of large wick. It's really not too crazy though. But when 9 AM or not 9 AM, but it's the 7:30. Okay, so yeah, we have a new 90-minute candle opening here at 7:30, and it's a new 30-minute candle, so I would say it's fine. So technically obviously the 1 out 30 minutes aligned, even the 90 minutes aligned, which is great. The 4-hour isn't aligned, but we can mechanically fade it, so we can say it's aligned. And the daily is aligned, right, with the daily profile as well. Like I said, this day is A+. So if this is going to be the low day, and you know, what do we want to say? Swing point away from the key level, away from the string switch second CT, and displacement away. Away from the string switch, especially on the lower time frame. So So we know that all time frames are lines. We have this range which second stage doesn't at the reversal, so we can trade the initial swing points away from the key level. So we want to see that swing point form to confirm low day and then the displacement away, essentially. That's what I'm saying. But but you can already kind of see how prices show more strength than on NQ with this closure. But here's why it was cleaner on NQ. Mainly because, I mean, the 4-hour work size isn't too crazy. But I think the lower time frame V shape's cleaner. The entry's cleaner. I think, anyways, maybe not actually. So we clearly have some V shape. But we have that V shape away from this range wedge. Same with YM. Honestly, YM actually, I like YM more. I'm not gonna lie. Just because your stop loss is gonna be smaller. So like entering right here, just say we enter here, stop at the low. It's like if I entered into NQ here, we know that 6am has a large wick. Right, it's pretty large. That's the opening price. So we know that price is gonna have a hard time expanding beyond this open price. So this is like the main draw on the footage right now. We have that clean V shape. So if I did enter off the CSD around here, I would have that stop at the low here. Again, measuring from the opening price to the low. Mechanically, I can fade it because my entry is around EQ instead of the EQ. My stop's in discount, and I would only shoot for a 2R. And we do shoot higher. I wish that 2R, but I want to see like a 1M's entry more, to be honest, in the 3 minute. But so you could say this is a valid reversal, but it happened at 7am, which is not a time where I am looking at the price. When I'm looking at price, like I don't show up in the markets this early. But we easily reach a 3R, and honestly, possibly more. I mean, that could have been, you know, assuming this is the low day, and price will just lace away from that and create a gap on the 1 hour and 30 minute to continue from. I mean, easily you can go break even once we displace away like this. Take partials possibly, so you bag some money, and then go break even. And then anything happens, whatever happens at that point, it really doesn't matter, even if you didn't take partials, because you're break even. But then assuming the driver will continue, right? Which is essentially what we did. But again, I can trade the initial reversal because of the time, so I have to trade continuation. So on the 30 minute, we do displace away and create this gap. So this is the universal sequence. Now, assuming this displacement away confirms the low day, and this gap should hold if the low day is going to hold, right? We can already see the strength switch in here stronger, so we're this high first. Anyways, so that's at 8 AM though when we create the gap, and then 8:30 retraces into the gap and doesn't, and every asset trades into the gap, so we have no S&P with it to confirm the gap. And Q trades into it, ES trades into it. So again, no confirmation to trade the leading asset being YM in continuation. So at that point, I have to see a second stage S&P fill if I'm going to trade the continuation on the leading asset. So what we could possibly do is maybe create S&P with this low and then close with the PSP at 9 AM prior to the driver. But we just don't do that. We don't create that. I'm just going to say that right now. But what I want to show right now though, this is pretty clean. So we know that we've confirmed the low day with this displacement higher away from the key level, their fine key level, the forward gap, or the strength for second stage S&P. So we have a confirmed low day put in prior to the driver, and we still have the drawn liquidity open prior to the driver, and we have only created the protraction stage or the wick of the daily candle, and we have yet to expand and create the body of the daily candle, which is very, very good to see, because that's when we can anticipate that one-sided expansion away from the low day towards the drawn liquidity to create the body of the daily candle. But we see 9 AM just inside bar doesn't create SMT with the previous candle low, right? And QES. Another thing that was actually really shitty about this too is like YM doesn't look bad, but it's hard to trust that this is going to be the low day because after we formed that string switch on NQ and ES, yeah, we displaced away, and ES did create a gap. But notice how price is retracing back into that range, back into like OT of this range. So it's like really shitty. Like we're creating filler things with the range low. It's pretty shitty. So it's hard to assume. Like it just that looks really shitty. I'm not gonna lie. So, um, but yeah, we don't have confirmation to the universal sequence, so I can't trade continuation unless 930 does something like maybe it creates a second stage PSP, whatever. I don't know, but it doesn't matter because we're seeing 930 open up and immediately expand higher on YM while it expands lower on ES and NQ, which is a classic form of decoupling. NQ ES weaker, YM stronger. Makes sense because YM is the strongest asset today. It's exactly what I want to see in YM. But exactly what you will see with decoupling PA, right? And QES are in correlation, weakest or weaker, while YM is doing its own thing, being stronger, doing the opposite. So you'll see this repeat pretty much every day, honestly. But typically, I mean, ideally it doesn't, but especially during 930, that's when it mainly happens. But so and then we've seen YM reach the draw on liquidity pretty much. Right, like I said, I wanted to get entered before price took this high out, and now I wasn't able to. So I'm really not interested in this day after the driver did what it did here. I really just don't care about it. But this is technically S&T with ES and YM. It's pretty spaced out S&T too, but it's technically the string switch on ES to break this S&T here. But again, am I going to short this? Yeah, the daily's aligned. The 4-hour supports the bear expansion. The 1 hour is opened up here. Here's that small wick. The 1 hour and 30-minute supports the bear expansion. But why is this not valid to trade? Even though we have confirmation as sync, and it's pretty clear and obvious that, you know, NQ is expanding lower, clearly not respecting the S&P. So if there's going to be any asset that's going to break the S&P, it's going to be the middle asset via ES. So you could say it's valid, but why is it not clean? It's a lower probability because, for one, decoupling, mainly, but also because of candle profiling. Right? We opened lower at first, like I said. So I'm not going to trade this day, bearishly. I'm not bearish at all. It's opposing to my bias, opposing to the candle profile. I can absolutely care less about it. But I still tried trading it on my demo account, just for fun. And I seen this 3-minute gap form here, and I was going to enter off this gap originally, which I should have, but I saw that we were creating a 5-minute gap too in the future, so I was thinking that we might provide an entry off of that, which would be a better fill to get just some more money out of this. If I did, yeah, I probably would have thought. I'm not gonna lie, if I actually were to take this, because you're at that point positioned higher up in the range. The draw on equities is pretty far, so we're close. So you would want to manipulate the RA a little bit, but we don't retrace that yet. We just I hate replay mode on TradingView, but we we just fell shy of it. Like no joke. I wasn't even gonna enter off the gap. I was gonna enter like right here, price, like kind of like right there, but price fell to trip me in by like 1 tick, and then it ran away. I was gonna enter like right here, just for a 2R, but if I did enter off the gap, stop would have definitely been like right here. I would shot for that 2R right there, which price did reach. So could have been a possible driver trade, but I don't care about it. Doesn't align with my bias. But just want to show that. So that's a sync trade during the driver, but again, decoupling like crazy. Definitely lower probability for sure. So now we're decoupling. So what do we really got to see? Right? If we're going to be bullish, which is what my bias is, then I need to see YM fail to manipulate this high. Right? which you can already see that happening on the lower time frame. We hit the high here, and we just consolidate and then just place higher through it, creating that continuation signature, right? So we're clearly failing to manipulate it. While waiting to see these assets, especially after ES broke this SMT, they need to start fucking displacing higher immediately after breaking this SMT. And we just don't do that. We just inside bar at 10 a.m. Like, that is super shitty. Not something you would really want to see. But I'm creating a future 30-minute gap here at 10 a.m. But we're also creating a future hourly gap going into during 10 a.m., which will form going into 11 a.m. So I should probably wait for that. Right. And I gotta wait for 10:30 to open anyway, so I might as well wait for 11 a.m. 11 a.m. Because if I'm gonna trade, I can pretty much get away with any asset, trading any asset, right? Because we have a reason to continue beyond this high. For one, price is falling to manipulate it, so it should continue beyond it to reach for this high. But two, it's not the main draw on liquidity. Technically, this is on the daily, but it's just so far from price. I really don't like that. So since the leading asset has a reason to continue beyond the full S&P high, we don't really need to manage switch on the lagging assets. So I was thinking at first maybe NQ could create S&T like this here, like that at 10 a.m. We just don't do it though, because this is technically S&P still with YM. So maybe we could do that. Count this as like a new reversal in a way. We just don't form it though. You just inside bar at 10 a.m. Yeah, so it's like that's not gonna happen. But we created that hourly gap, which is a PSP at 10 a.m. So possibly we could create that string switch second stage PSP S&P full, which we do. But again, this asset sync, this is what also makes it super unclean. It's because if we're trading asset sync, we literally form this asset sync in a decoupled price action, right? NQ, YM expanding higher, NQ and ES expanding lower. Ideally, if we're trading asset sync, the lagging assets in continuation, right? Ideally, they're in continuation. Ideally, they all V-shaped higher. Ideally, the S&P is being printed within premium, etc. But they're just not in this scenario. So it's really just lower probability asset syncing, right? I feel like, honestly. So I just didn't really care for this, and I just turned out the charts at around 11 a.m. I would say. But I was really uninterested in today after what 9:30 did on YM after it took this out. But we technically do create string switch via second stage PSP S&P fill at 11 a.m. here. And again, I don't like how this is forming because it's kind of not with a key level on ES. And you want all assets to be reversed away from the key level. Yeah, it's a key level on YM being the universal sequence. It's a gap, but it's just failure swing within an overall consolidation range on ES. That just made it so unclean. So I think this is just valid to skip. I'm not gonna lie. Even if it does hold this and we do displace away higher from it, I just don't like it. I'm not gonna lie. If anything, I would rather trade YM. But we end up breaking that. ES doesn't hold it. It doesn't V-shape away at all, ever away from it. That's why I like trade Zella, because it actually shows the time where you're at. Yes, we break that, but with NQ we hold it. We hold that SMT. Again, not really with the key level. Now I was thinking like maybe it doesn't matter if it's not with the key level on NQ and ES in this scenario, because these assets didn't displace higher, so it kind of makes sense why it's not with the key level. It's not with the overall range low. But I still think that matters. I still think it looks unclean. I'm not gonna lie. But you could say this is valid. The 4 hour, the 1 hour 30 minute, the 4 hour, daily is lines, and the 90-minute lines, the lines going into 10:30. So now what do I gotta see? NQ is holding this range, which is second stage PSP. I really need to see displacement Y in his V shape. And honestly, I could probably get away with trading YM if I don't like NQ and ES, but again, ideally NQ and ES are actually forming that reversal away from the key level. Like maybe we create a gap here and then we create the string switch with that gap. But the string switch isn't really forming with a key level 1 NQ and ES. I think that's valid, that's logical. I know that's true, especially for reversals. But for continuation, I'm not sure if that's truly important because, but I would assume it is. Like ideally we displace higher and create a gap, and then, you know, that's when we form the string switch. And a matter of fact, yeah. So, anyways, I was gonna say I remember JXC talked about that with one asset sync trade he was revising or going over a long time ago, but anyways, so yeah, so we hold that S&T string switch here, and let's go down to the 3-minute. This will be 11 a.m. C2, 12 C3. So we really want to see prices V-shape away from this. I mean, like, we created this SMT such, like, a long time ago. Right here, pretty much. We just don't reverse away from it, and then ES breaks the SMT pretty much here, right now. Again, look how ES looks. It looks like shit. It's just, like, super shit decoupled PA. It's like, it just looks like shit. So it's like either the string switch is happening with, like, yeah, ideally it's with a key level, honestly. So ideally, like, ES takes a slow out or some shit. And you create a string switching, maybe second stage PSP, some shit like that. This is like not really what you would want to say. So, but we, especially with how ES looks, but we create this here. And I'm like, I don't care about that. That looks like shit. If anything, I would probably use these series of down close candles. Honestly, probably wouldn't use that. This doesn't look promising. Promising. I mean, realistically, like YM looks okay. I'm not gonna lie, but again, I'm not gonna try this based on how ES and NQ look, how they're from this SMT, where they're at. But maybe the entry could have been taken there. Stop at like EQ, then nice 2R could have been maybe possible. Possibly. I'm not sure if we did. Yeah. To target this way. Simple external to or internal to external. Realigning this lower time frame model with the overall like daily model. Oh shit, what did I just do? I don't know. But yeah. So let's revise real quick. I know this video is long as shit. So again, I couldn't trade the initial reversal because it happened so early on in the day. And I couldn't trade continuation because away from this gap, because there was no confirmation to it prior to the river. We're going into the river. And like I said, I really want to get entered before price took this out. So when 9:30 took this out, that really is uninterested. That makes everything very uninteresting at that point. I was very interested in today. It looked really clean, but now it looks very uninteresting. So all I can really do is either wait for this to fully move like this high and either trade the leading asset to continue through the affiliation high to reach for this high, or I trade async, allowing us in continuation to catch up. But it's just how async formed, right? Decoupled PA, they expand lower. Ideally, every asset expanded in sync. We create that as new premium, right? So this async looks like shit. And then also how the string switch formed going into 11 a.m. It looks like shit. It's not even with the key level on NQ and ES. And I'm really gonna study that because I really need to. Because I know with reversals, like I said, reversals, you want all assets to be reversing away from a key level. Like if we're bearish, let's say this is the key level that we want to reverse away from. Let's say Y trades into it, creates SMT, or yeah, let's say it creates SMT, whatever, and let's say this is NQ, and NQ leaves feather swings with that high, let's say, creating that SMT here. Of course, the only way we can trade away from feather swings, or yeah, assume this could be feather S&P because what it will do at the initial reversal, they V-shaped higher. That S&P is being predicted with OT, so this could be feather S&P. Everything checks the boxes. It really depends on how we format it. In order to format as prominent S&P is either string switching or displacement away. If we're trading away from feather swings like this, I demand displacement away. Ideally, unless it's like super clean to anticipate this S&P to hold because everything aligns, right? It supports the bearish narrative, whatever. But even then, though, but um, but yeah, um, but let's say, I'm trying to think about like a good example in this. Let's say we traded that high, like key level. Let's say there's no S&T with it. Let's say all assets trade into it, and let's say NQ. This isn't like the main high. Let's say that we have feather swings above that, but not on YM. We're not going to view this as a prominent reversal. There's actually some good examples of that here in Asia. Recently, like recent PA. Like right here, for example. Let's say opens up with an consolidation. And YM, the daily, it looks clean for second stage PSP fill C2, C3, so YM should respect discount CE. Right, and this, it was super clean for NQ to catch up to break this SB at the lows here. But we know that, okay, we'll start finding clean before. We don't have one. We clearly have some form of V shape, right? Yesterday. CST form yesterday within that C2. So we want this range to hold. So there's no far gap. It has to be a 1 hour relevant swing, which would be this high. So like YM could manipulate this high, open higher, trade to this key level, and then deform the high of day and then V-shape away, right? But if YM trades into this high, right, we want all assets to be reversed away from their key level. So even if YM trades into this high, maybe creates S&P, whatever the fuck, I still can't assume this is a prominent reversal until we displace away because NQ is stuck within this consolidation. I don't care about anything internal to this range here. So, like, I don't care about this high. So I would have to see NQ manipulate this high, or YM manipulates this high to assume this is a prominent reversal. That's at reversal, and so now I'm viewing continuation today, right? So I'm curious on if that applies with continuation. And I remember GXC making a video about how he was revising gold, and he was talking about how you know, gold and silver were in tandem, right? We created SMT here with maybe gold, while silver had that SMT here. How can I explain this? We formed like a string switch PSP here, but it wasn't within any key level on any asset, right? So, of course, in order to anticipate a reversal, it has to be at the key level, but like, how can I explain this? Yeah, so that string switch is irrelevant, right? But because essentially, if we don't form SMP with the key level, then we have to have SMP within it. And if that PSP is not within a key level, it's not valid. But it's a little bit different though than this scenario, because then we created a CSD, whatever you can say, And then we created a PSP, a string switch PSP within that CC, which you could say confirms the CC or async, which we don't really use CSDs, right? Our key levels are swing highs, swing lows, or gaps, but that's why you didn't really care the trade up. But it happened with all assets. It was actually within some form of key level. This here though is just, this string switch is, yeah, within a key level line, but it's not on NQ and ES. So I think that just makes it super unclean. I'm not gonna lie. But anyways, I think that's valid. So that's my EOD recap. I don't think we're gonna do shit for the rest of the day, obviously. I think it's cool. Like, I think it's interesting how, yeah, 12 opened up here, so it could possibly expand higher to reach as high at least. Because 6 a.m. on the 6 hour didn't support the bull expansion. But yeah, we're just chopping, not really doing shit. Technically it doesn't be there. It might be denying me up. Yeah. So you can say that's a string switch via S&P fill on the 90-minute sequential S&P. Interesting. Which, at this point, all assets are, V-shape and higher. The face price confirms, the S&P at 930 here is fake. So this is exactly what I wanted to see. And so again, this is kind of like the same scenario. How can we trust this string to which is prominent if it's not really with the key level on NQ? But this scenario is different though, because this is actually after displacement, which confirms reversal. And it's with, yeah. But instead, the original string switch at 11 AM was like with these lows here. Like, this looks way better on the 90-minute. But yeah, I can care less about this in the building. It does expand though. Deforms. What does he just do? He just literally looks like shit. Wonder how we V-shape away from that. It's going to 2 PM as well. So like the GX, it's a string switch, second stage PSP. Interesting. And this is like the last chance for price to go higher today. This is going to be the low day because we engineered a relevant swing within this range, so we have to manipulate this low. And we reached it and manipulated it and created a string switch second stage PSP prior to 2 PM opening. GXT continuation sequence. 2 PM is opening up with a line swing. It's the 1 hour 3 minutes aligned. The 4 hours aligned during 2 PM. The dailies aligned, right? So it could be like order print ranges like this. This actually could have been clean. I don't trade near PM though, but we also have that string switch S&P fill in the 90-minute firm axis sync on NQ and ES. You could say this is clean because we're actually within key levels now at this point on NQ and ES, right? That's why it's clean. But down here we weren't. That's why it was shut, honestly. I think that is valid. But if you look at ES, that looks like complete shit. I'm not gonna lie. Like it's to take that looks like shit though. Wonder how we V-shaped away from this. So all time frames are aligned. We have confirmation to. You can view this as a universal sequence, but in the form of a relevant swing. Displacement higher gap. We're tracing that gap, but we failed to expand away from that, which engineers a relevant swing within this range. So if we're going to continue from this range, we have to manipulate this relevant swing. And we do. So everything's aligned, and we have confirmation to that relevant swing for that, I guess, continuation with a second stage as SMT, right? String switching, which is ideal. It's super cool. It's also in the form of string switching from Mass Sync. So pull that SMT. 1:30, 2 p.m. Create that V shape. Not gonna lie, I don't really hold it though. And then we don't really V shape higher on these assets. NQ, ES. I just don't like how ES is not really showing any willingness to want to switch strength. Yes, it is here, but this just looks like shit, bro. I'm not gonna lie. It looks dog shit. It's like dog shit. Straight up. But NQ, I mean, it's not bad, but I would probably wait for NQ to CSD higher. Yeah, right there. And I would just shoot for a 2, honestly, in this scenario. Like, we could reach this high. But this is such a lower probability trade, I would say. Let's see. Okay, right when we start expanding higher, not right there, but right when we do that and close here, I'm break even. And the price reaches the draw on Thursday. So, I mean, yeah, that could have been a possible opportunity, honestly. But it was at near PM. Like I said, I don't trade near PM, so. And I was uninterested in PA after what 930 did anyway, so I don't really care about it. You could say maybe it was valid, but it's not the cleanest shit of all time. I'm really not mad that I missed it, so it doesn't matter. But, yeah, so I think that's pretty much it. I don't want to make this video too long, so. Alright.